Good morning, welcome to IG's early morning call. It's Thursday, 11th of May. Let's take a look at the headlines. Data out overnight showing that inflation continues to drop in the Chinese economy. The recovery after the drop down in the attention to COVID means that the economy is opening up, but it's an uneven recovery that we're seeing in the Chinese economy. Basically, it's all about the economy today. Bank of England interest rates expected to raise rates by 25 basis points to 4.5%. But the big question is, what next? Sterling just recently trading at one-year highs against the dollar. And late last night, it was a down day for Disney. Disney Plus is stemming its losses, but it nonetheless drags down the entire group. Subscriber numbers on the way down. Take a look at volatility, down for a second day in a row, 20.34. This means that there is once again this appreciation for risk assets. We talk about the inverse correlation between these two things. And in fact, that is what's happening today. But in fact, as what you can see here, despite the fact we are expecting a slightly stronger start to the European markets today, you can see the London markets up at 77.44. It's only a small gain at the start of the day's trade. And this seems to be what's been happening recently, is that the day gets going tentatively and then it's steered by other factors, sometimes from the States, sometimes from Asia, sometimes from other areas of the world. But the bottom line is that with the earnings starting to taper down, there's not much there necessarily to catch the eye. But still, with 30 minutes to go, as I say, we are expecting a slightly stronger start to the trading day. Same sort of story in the German DAX. We're up at 15,927. Not too many stocks to watch this morning. Rolls-Royce, ThyssenKrupp, Deutsche Telekom. Some of the stocks to watch worth looking at today, perhaps possibly maybe, but on the whole, broadly speaking, there's not really much move expected. But you can see in the grand scheme of things, we're not too far away from the recent highs that we've had in the German DAX. We saw intraday highs back on Friday last week at 16,005 points, not too far away from where we are at the moment. That was a 35.5% rise from those October lows. So the market's, broadly speaking, holding on to the recent gains that we've got. There doesn't seem to be anywhere else, basically, for money at the moment. I think that's really the bottom line. The French market's a little bit weaker in terms of the longer term picture or against the German DAX, but nonetheless, like the rest of the European markets, expecting a lift at the start of today's trade. We're up at 73.76, again, just by a margin of something like around about 15-20 points up on the cash close last night. Overnight in Asia, let's take a look at what's been happening there as we see losses across the board, but only marginal so far as the Nikkei was concerned at the close. Hang Seng Stock Index, S&P ASX 200 also on the way down. And a snapshot of what happened late last night in the US markets before the release of that Disney number out after the closing bell last night. We saw gains on the Nasdaq in excess of 1%. S&P 500, I think it was tech stocks that really did much of the upside business that we saw yesterday. The Dow was down almost 0.1%. You can see at the moment on the Dow chart here, we're opening up again a little bit lower. You see the wide volatility that we got yesterday with the candle extremes that we saw in yesterday's trade. And that drop down that we saw at 33,234, we saw a rise in excess of another almost 300 points above that. 500 points above that. As at the high point that we saw in yesterday's trade. So that was the wide divergence between the bottom and the top. And in fact, yesterday, as we've just seen, not really ending up too far away from where we opened up the trading day. But there was a little bit of pressure beginning to build, as you can see there on the Dow Industrials. The tech-heavy Nasdaq in yesterday's session up more than a quarter, adding an extra quarter of weight on from the beginning of this year, from the 6th of January. 25.26% up at the high point yesterday, and we're consolidating at that at the moment at 13,368. In fact, I think what we can do is to move that up there. It gives you a better idea as to where we are as at the top. But the Nasdaq, broadly speaking, trading at levels there not seen since August last year. So money going back into those technology stocks. Now, last month, Chinese economy grew at the fastest rates that expected that we've seen for some time in the first quarter. 4.5% was the GDP, thanks to the lifting of COVID curbs. But at the same time, several indicators point to an uneven recovery in the Chinese economy. After 3 months of expansion, factory activity contracted again in April, with data we've just seen, while retail sales growth hitting a 2-year high. Now, this morning, we saw further indications that the world's second biggest economy is finding it difficult to shake off the COVID-induced damage. The consumer price index in April rising just 0.1% compared to the same month this time last year, the lowest rate since February 2021. So something like around about 27-month lows for CPI, slowing from the 0.7% annual recorded gain in March. Economists anticipated a 0.4% rise. Producer deflation also deepened, falling at the fastest pace since May 2020. PPI was down 3.6% year on year after a 2.5% drop the previous month and lower than the forecast for a 3.2% fall. So far as the markets are concerned, where we're looking, you'd be looking at what's happening with the Chinese yuan, but in fact, not much is happening there at the moment. You can see on this chart, if you look at what's happening here, we've got the yuan, the dollar rising against the yuan, yuan weakening against that US dollar. NBS attributed the weaker consumer inflation to the base effect, vegetable prices extending their decline to 13.5% and pork price growth slowing to 4% from 9.6% in March. But the fact remains that CPI remains well below the government's ceiling around about 3%, which is one of the contributing factors, I think, here to that shrinking CNH. This is the offshore currency traded against the US dollar, and this chart showing the dollar rising against the yuan. Now, the Bank of England set to decide on interest rates at high noon UK time today. Investors fully pricing in the move that's expected in the market. The 12th straight hike is expected at 25 basis points today. That would take it to 4.5%, a level not seen since October 2008. If there is any doubt about today's decision, the market will be looking for clues on the likelihood of further rises in the months ahead. Earlier this month, the Reuters poll showed most economists expected a pause at 4.5% for the remainder of the year, but not all. Earlier this week, Goldman Sachs said it was now forecasting rates to peak at 5% in August this year. As recession fears are moving away, it gives more room for the Bank of England to continue its fight against inflation, according to the Goldman Sachs report, which stubbornly remains 10% or more, 5 times the Bank of England's target of just 2%. Now, how do you trade this? Well, I've been following this inverted head and shoulders pattern. It's a little bit wonky, which gives a slightly rising neckline. But if you do look at this pattern particularly, and it doesn't really matter too much where your lines go, but obviously the inverted head and shoulders has a sort of a life of its own. So you can see here it's above there. Now, we just dipped below that today. I'm waiting for a fairly good, clear candle close above that line. Technically speaking, you then measure the inverse head to the neckline, then you project it up to where we are. And that would take you roughly back to levels not seen since June 2021 at around about the 140 level or 140 level for sterling against the US dollar. But nonetheless, just to confirm, in the last couple of days, we have risen to levels for sterling against the US dollar not seen since April 2022. Talking about the dollar, over in the US, 1:30 p.m. today, we get producer prices expected to rise 2.4% in April year on year, after 2.7% in the previous month, and initial jobless claims. Market forecasting 245,000 new claimants for last week. And for that, I'll take a look at what's happening with the euro-dollar trade. This is the euro down against the US dollar. In today's session, we got a bearish engulfing candle there today, coming down to 109.48. If we close at these levels, it'll be the lowest close since April the 18th. If you are short on this, going into the numbers today, in the US, your stop will go above this rising line of resistance that we've got. Let me just quickly take that down to those lines there. It's a fairly arbitrary figure, but if you were to go short at 109.48, I'd be wary about putting my stop any closer than what about 110.50, that sort of area. So you want around about a cent difference between where we are and where the stop loss would go, just in case there's a fight back for the euro. But at the moment, at least, the US dollar is winning out with a slightly stronger day against the euro. In among some of the stocks to watch today, I want to quickly catch up with what's going on with Rolls-Royce. Rolls-Royce is going to be one of those interesting stocks, I think, to watch at the start of today's trade. Let me just dial in a chart, because we've seen some recent highs for Rolls-Royce. And this line up here at 160 was the highest print we had in Rolls-Royce since October 2020. Today, it says its performance year to date was in line with expectations, underlying operating profit guidance unchanged. And the company says that supply chain management remains a key operational challenge. Now, this report out today is ahead of the Rolls-Royce AGM. So it's an AGM statement, but it's also a trading update for the company. And they've admitted to the fact that flying hours, whilst they continue to recover, large engine flying hours are still at a discount to where we were going into COVID, 83% of pre-COVID levels. That's for the most recent 4 months through to the end of April. But that is not good news. Rolls-Royce has a lot of business out there for servicing these engines. And when you get flying hours reduced like this, it means you get reduced servicing, potential servicing costs as well, or benefits rather, profits from the way the company continues to maintain its fleet, which serves as power for many of the world's airlines. Tufan Eugene Bilic, the new chief executive, will be talking at the event today. I guess many investors will be wanting to hear what he has to say about his strategy, but he's been fairly upbeat about the outlook and the prospects for Rolls-Royce. You can see here from this chart, from the lows we had back in September last year to the highs that we had back on the 8th of March, the stock was up 148%. During that period, Warren East left and Tufan Eugene Bilic came in as the new chief executive. And this line up here at 160 pence is the line to beat. And that will then take us back to an even newer recent higher high since October 2020, 155.6. So we're just 4.4 pence away from breaking that 160 level. It'll be interesting to see what comes out of today's report for AGM. Meanwhile, in the German markets, ThyssenKrupp, one of the stocks to watch there today, posting second quarter net loss of 233 million euros after a rise in interest rates and a cost of capital, leading to impairment losses of 350 million euros. The company says its Steel Europe division, which is now up for sale, which has that impairment loss. Second quarter adjusted operating profit, EBIT, declined 74% to 205 million euros, mainly due to higher raw material costs. It's still really painful out there for these steel makers. Steel Europe, for which ThyssenKrupp is targeting a standalone future, made an adjusted operating loss of 14 million euros in the second quarter, down from 479 million profit in the same period last year. For me, there's not much in this report that really shouts out things are going well. Yesterday, we saw a drop in the stock down to 666 euros 0.3. And interesting to see where that stock goes at the start there today, but certainly they're going tough for these steel makers. Take a look at Deutsche Telekom. It saw an adjusted EBITDA rise of 0.9% in the first quarter to 10 billion euros, beating expectations. Revenue rising 0.3 to 27.8 billion. That was in line with expectations. The group now expects EBITDA to reach 40.9 billion euros in 2023, 100 million more than its previous forecast. So add all this together, and it looks like a fairly positive start potentially to the trading day for the German market. Let me just quickly show you what's been going on with the chart. Bring the chart up. There we go. Deutsche Telekom is trading at 21.27 after a decline yesterday. If you're long on this, your stock goes in under this area down here to around about the 2090 level, which would coincide with the 100-period moving average. And you'd look potentially for a rise at the start of today's trade for Deutsche Tel. Let's look at what's happening with another German stock, the chemical company Bayer, at 58.24, which is where that stock will open this morning. EBITDA fell 14.9% according to the report this morning for the latest quarter of the year, 4.47 billion euros. The group said 2023 results would likely come in at the lower bound of its target range, and at 58.24, potentially a downside start to the stock of Bayer at the beginning of today's trade at the top of the hour. Disney shares fell in extended trade last night on the IG platform after release of its latest quarterly earnings. Earnings coming at 93 cents per share and revenue at 21.82 billion. Both lines broadly aligned with forecasts. But the group's streaming business, Disney Plus, caught the eye for all the wrong reasons. Last November, Bob Iger was brought back by the board with a main mission to put a cap on swelling spending at Disney Plus. With the help of a price increase and reduced marketing expenses, Iger managed to reduce Disney Plus losses by 400 million compared to the last 3 months of 2022, ending the quarter with an operating loss of 659 million. But the division also lost subscribers for the second straight month, down 4 million to 157.8 million subscribers. Most subscriber losses coming from India after Disney lost streaming rights to IPL cricket matches. Disney also shedding 300,000 customers in the United States and Canada, where it raised prices last December. This is a blow for investors who expected Disney Plus would add more than 1 million customers in the quarter. Let's take a look at the share price chart. Down from the highs that we had post-COVID back in March 2021 at $205.20, hitting the lows down at 84.10 in December last year. Look at the drop that we saw late yesterday. Now, this all came at the same time that Disney plans to launch a new app that combines Disney Plus and Hulu. And with it, Bob Iger wants to open up more opportunities for advertisers, and an ad-supported option will also be added to Disney Plus in Europe by year end. But this drop would come as a blow to investors, ending down at the bottom of the candle yesterday, indicating that there were no buyers at 96.30, ending the day down at levels not seen since the 29th of March. You remember 3 months ago, Bob Iger vowed to reduce costs by $5.5 billion, partly through 7,000 job cuts. He said yesterday this target would be exceeded. That's it for what we've got in terms of some of the corporates. Let's take a look at what's happening with oil this morning, ahead of a quick snapshot of where we are in terms of the EIA. I just want to show you the price of crude. The EIA stockpiles yesterday, crude oil inventories rising by 2.9 million barrels last week. Let's take a look at the share price chart, or the price chart of crude, 72.91. Not much moved on from yesterday's move that we saw all the way down at 72.90. One of the other areas of the market I think worth looking at, and I can't give you any reason for this that's happening, in the last few days we've seen what can only be described as a stunning loss for the price of New York orange juice. You remember me talking about this greening, citrus greening problem that many crops have been getting, especially in Florida, and also the damage done by the hurricanes, pushing up the price recently. In fact, that was to levels not seen in several number of years. Then came this drop. We can't find too much about it, other than it means now that some other nations are now beginning to try and look to fill the gap. I was reading a report from ABC, Australian Broadcasting Corporation, yesterday, suggesting that Australia might step up to the plate. But of course, it takes a long while to bring on new production. So it's going to be a while before Australia produces anything like the sort of figures that it wants to produce in order to fill what is perceived to be the gap, certainly this year and possibly in the next couple of years, because of the citrus greening damage that's been done to crops and the damage done by hurricanes. And of course, if the weather continues in America, that's likely to continue. So I can't really see too much downside necessarily coming, even if you have the potential input of more supply coming on in the next few years. It's not going to happen immediately. So it'd be interesting to see what happens to the price of orange juice. But at the moment, at least, just recording what is at the moment or as of yesterday's close, the third day in a row of losses that we've seen, taking us down to levels not seen since the 27th of March. Before I leave you, just to look at what's happening with the price of gold. Not much happening. In fact, we've got a little move here, which is showing us with a symmetrical triangle, which is building up nicely. That's got to escape from that Wednesday, Monday next week. So I'll be looking to see whether or not we get any sort of spill out either one way or the other for that in the next couple of days or so. That's it. We're back at 10:30 with Charting the Markets. Do watch out for those stocks at the start of today's trade. Looking out for Rolls-Royce and ITV here in the UK, and Deutsche Telekom and ThyssenKrupp at the start in the German markets. As I say, back at 10:30 with Charting the Markets.